going on, guys? What's going on? Happy Sunday. Just wait for a few folks to come on. What's up, Paul? What's up, Jay Currency? What's up, Tarson? What's going on? What's going on? Happy Sunday. Appreciate it. Appreciate it. We're trying. We're trying. At least we're doing, or at least we're on here studying more than 95% of the other people that are probably just relaxing this weekend or doing other stuff. So we're going to get studied and we're going to get prepared for this week. Hopefully another awesome week. Last week, a lot of things worked out pretty well off the charts. So I'm hoping we can have some chart plays again this week. So pretty excited to talk through some other stuff. Did a couple hours of prep time here, and it should be another good lesson. But appreciate you guys coming on. What's up, Ken? What's up, Miami? Tiffany, Warthog, how are you guys? Eric, Sadia, Mike, Anderson, what's going on? What's up? What's up? Happy Sunday. Just gonna wait a couple minutes here. As you guys know, usually like to get started after 2 or 3 minutes when we get a little over maybe 50, 100 people on live, and so we could get some good discussion going. But just give me a second here while I get sorted and prepped out, and we'll get started shortly. Okay. Okay. What's up, Taylor? What's going on? Okay, everyone's starting to trickle in now, and we will get started shortly. Awesome. What's up, Derek? No problem. I love doing it. Honestly, I love doing these lessons. Gets me. It makes me feel like I'm doing something awesome for everyone. So this is really great. I love to coach. I love to teach, as you guys know. So this is these lessons are pretty good, and obviously they're helpful for me too. Because then all of a sudden I'll be trading and I'll be like, boom, I have these levels in my head. I know where I'm looking to enter, exit, etc. And it's all about repetition and preparation. So the lessons help me as well. So awesome. Cool. I'm gonna get started, guys. So basically, today's lesson is going to be strictly running through about 2, 4, 5, 6, 7, 8, about 9 or 10 tickers. And then we're going to just do we're going to start with basically a discussion of where we left off last week in the video, which is pretty crazy because we were calling for a big bear market rally last week. The S&P finished up 4%, QQQ finished up 2%, and the Dow finished up, I think, closer to 6%. And I think it was the best historic 1 week record in October, I think from the 1950s or 1970s. So it was a ridiculous stock market move on equities. Dollar went down, rates went down a tad, and I do think we're a little bit overshooting high here, but we're still forming those lower lows. So you have to be careful, but we predicted some of these things. We talked through the video. If you guys want to check out the recent analysis on last Sunday's video of how we predicted how this week would go. And it pretty much went, hand in hand. And all we have to do, guys, is trade charts and price action. I try and teach this each and every day within the Discord, across different social medias. Before we get started, quick introduction for a lot of new folks. I think there's a lot of new members, and there's a lot of new students of mine, and as well as new followers on StockTwits, Webull. You guys can follow me on Webull on the community pages, a little over 54,000 followers there. You guys can follow me along there. I post some trades throughout the weeks on there. The most active, obviously, I'll be is within the Discord. That is everything basically in real time as best as I possibly can. The trade setups I'm seeing and trading in real time. And you also can follow me on as well as on StockTwits. Just created a Twitter as well, but I barely know how to use it or use it. So I try and keep it pretty simple. StockTwits, Discord, Webull is kind of my 3 main avenues if you guys are looking to follow. And then as well as we have an awesome Discord, options team, premium server, mods, and etc. If you guys want to join and check it out. Obviously, you can cancel anytime. So, before I kind of jump into it, as I mentioned, we're calling for a bear market rally. We sort of got that, and it blew out my expectations this week. And I'm going to kind of go through the SPY levels because I think those levels are really helpful. And we sort of give our level zones because as, these moves are starting to happen, and they're actually happening really quickly in this bear market. things are really overshooting down and really overshooting up very quickly. So there's a lot of opportunity to make some really great coin on the volatility. And so we kind of I want to walk through the SPY versus the QQQ, because what was very, very interesting to me this week is that all the mega cap tech stocks, you get your Amazons, your Apples, your Microsoft, your Googles, basically the FANGs of the world, or if you want to call them your biggest weighted stocks across all equities and indexes, probably the past 2 decades, 20 years. We've seen the biggest one-day drop-down moves in multiple decades on these names, maybe since the dot-com bubble 20 years ago. So it's pretty drastic, some of the moves, like Amazon losing 200 billion market cap from low to high on Friday. Google shedding, I don't even know, 60, 90 billion. Microsoft down 210 billion. I mean, these numbers are ridiculous in terms of market cap losing value. I mean, Meta's dropped almost 80% from high to low here, from $1 trillion market cap to under 300 in less than 8 months. I mean, it's ridiculous if you think about some of these moves. And what's really crazy to me is that with these moves happening, you'd think that the indexes would be down 3, 4, 5, 6%. I mean, drastic moves, right? Because these companies, all those companies I just named, probably have about a 20% weighting on the S&P 500. But no, what we're actually seeing is now new names sort of take up more market share. So you're seeing a ton of energy names. I'm going to walk through that today. You're seeing boring defensive names like healthcare names that are just at 20, 30, 40-year highs. I'm going to talk through some of those charts today and how we might be able to trade them this week, whether it's shares or options. So there's a lot of really great charts out there, and there's a lot of bigger names that are taking sort of the money out of tech and they're going into other names, sort of holding up, as I say, holding up the indexes. And you're seeing green moves on the indexes when actually the biggest stocks in the indexes are going huge red. So it's quite comical to watch that. And I was pretty confused at first because I'm like, what's going on? Even just talking to an index trader, I mean, they're shocked at the drastic moves as well. And the fact that the market's holding up green, not even just holding green, actually breaking out. So very, 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 very impressive, strong moves. And why can we see those moves is all based on price action. I'm going to talk through that. So today's lesson, I'm going to be covering the SPY QQQ as a quick sort of update from where we were last week and this week, and then targets going forward to the upside and downside. And I'm going to cover 2 small caps. I know some people like to trade some small caps. So I'm going to cover 2 small caps that have sort of the breakouts of last week. And then I'm going to jump into, after the 2 small cap names I'm going to cover these 2 names that are mega cap. One's energy, one's healthcare. And I'm going to talk through sort of the 52-week highs, as well as a sort of monthly, quarterly sort of review on those names and the charts, and how big traders are actually going to be trading those probably coming up in the next couple of weeks. And then I'm going to cover some earnings plays, as I covered some earnings plays last week. Just going to give you levels. Amazon, the levels was 88. It bounced perfectly off the 88 zones in after hours on Friday, and it actually closed at 103 something on Friday. What a drastic move on Amazon from bottom to top in a one-day finish. And then, so we've seen levels there. Look, I have to understand, you have to read the charts. So when earnings come in, you have upside targets, you have downside targets. Some strangles last week played out for the team, 300% movers both ways. So, there's opportunity in this market because of how drastic the moves are. So I'm going to be talking some earnings plays, maybe a couple strangles, as well as just maybe where targets and up and down can possibly go. And then we're just going to close off. I'm not even going to do a Q&A today. I know people want to watch football, and I know people are sort of relaxing, getting a pen and paper, getting some notes ready. But I'm not going to do a Q&A. Maybe next week I'll do a Q&A session. We did one last week. So I don't really want to jump in and waste some time there, since I have some more analysis to do with some of these tickers in the session today. But let's talk through the SPY. 1, 2, 3, 4, 5. This is the daily chart here, guys. Friday, Monday, we opened up at the low of about 373, 374s, guys. We closed the week at 389. That's a big move. As you can see, these candles here are pretty large in terms of the volume. The volume was pretty good. Wasn't small as in compared to back in early September, about a month and a half ago. So the volume's actually picking up in here, which is a sign for a potential stronger move to the upside. And so we talked about our levels, right? Our levels were 380 SPY, that got hit. Our level was 385 SPY, that got hit. Our third level was 390 SPY. We basically just missed it by 48 cents here on Friday. I'm expecting 390 to be hit this week, most likely. That would be the 4th target. As you remember, our 5th and 6th targets, guys, I have the bars here just so you can easily follow along like a 2-year-old or a child, or as if I'm talking to a dog, right? I mean, this is very simple stuff. These lines here represent the resistant levels, are actually my targets for the actual S&P 500. And so if we break this little top wick red here, right, the breakout spot, next spot would be around 400. So anything above 390, I think you're probably going to see 400 pretty quickly, as we've seen. Anywhere in the 400 to 420 here, I call this sort of this gap here, anywhere 400 to 430 even, that would be an area where I love to pile on shorts. So this is where you want to be reshorting names that have bounced big off these lows. Maybe they're up 20, 30, 40, 50 bips, 50%. You want to probably start shorting and building short positions. Or if you're not shorting shares, you want to probably start building out long put positions in here. So anything over 400 in SPY, I think it's a great opportunity to start maybe buying 360 SPY puts for maybe next March. You start scaling into those while they're pretty cheap in the 400s. And then when you get your next 10, 15% down move on the spider down in here and we retest those lows or maybe break through it and go all the way down in here, I still think we're going to see that SPY 330, maybe even 3,000. So do keep an eye. I do think we still have 20, 30% downside on the spider. I just don't know when it's going to come, and no one does. But we have to trade the technicals and the price action. But I still think in this area above 400, you can grab some shorts. This is where I'd be scaling out into strength. So anywhere buying in here, guys, for the indexes, I think you want to be scaling out above 390 to 400. I know we started scaling at 380, 385. Now we're about 390 bips. I want to be selling into the strength here. I think we're going to not crash. I think we're going to reject off the 400, 410 level, maybe 420 if we get an overshoot squeeze. And then I think we reject on the 420 squeeze and we actually go down lower as quickly as we came up. And I think we retest at 370 pretty quickly, and then I think we retest this 350 ultimately, maybe in 4 to 6 months. So keep an eye on these levels, guys. They're levels here for a purpose. The SPY is down 18% on the year. That's pretty damn good if you think about what we've had happen with the Russia, Ukraine, with interest rates, and China's economy. I mean, down only 18%, while the QQQ and NASDAQ's down about almost 30 bips. So we're down about 29% here on the year on the NASDAQ, which I think is pretty fair. I think that's pretty fair value. And as you can see, this NASDAQ is underperforming based on all the big mega cap tech. So if you compare this chart, right, in the daily chart, and maybe we'll look at the weekly. We compare this daily chart or weekly chart of the QQQs, it's much underperforming the spider. And obviously there's a higher sort of multi-year PE valuations on these names, which is why they're getting absolutely killed. So I think the QQQ actually has lower to go, and I think people are actually coming out of these names and more into defensive names, as I'm going to talk through next. But, the QQQ levels, I think, are 270, 260, 250. And then I think if we break below that 250 mark, I think you're going to get a straight shot down to 220s, 230s. And that's still above the March 2020 lows. So I even think QQQ, call me crazy, I think the Qs can maybe even get down to 200 levels, which would be a full 50% retracement from the highs of the QQQs. And I think we can probably get there in the next 4 to 6 months, potentially, if we continue crashing on the mega tech names. And I'm only saying that is because I'm seeing these huge names crash for the first time in decades. And I don't know if this is like, oh my God, by the dip, we're going higher. It's going to be a quick V-shaped recovery. I think this is a long, slow bleed for a lot of these big names that are just burning cash. A lot of them are unprofitable, and they've been on a 20-year bull run up thousands of percentages, and I just think we have more to go. So be patient on the QQQs and your tech names. I think there's the boring stuff is the stuff you maybe want to play the next 4 to 6 months. So that's the QQQs. That's just a quick update on levels on the top and bottom side. For the highlight for today is I'm going to talk through 2 tickers, and this is going to be a different approach for me because I normally don't look at the multi-year level views, but I think it's really important. So if we look at ExxonMobil, I want to quickly pull up the monthly chart, okay? So back in 1997, we had a spike all the way to about $70 a share. It took about 10 years to get back to almost those levels. It then took another 8 years to get back to those levels. So now we had a triple top at around 67, 70. If you keep in mind, over a 25-year period, it took 25 years to retest these double, triple highs in here at around 72, 73, and we blew through it this past sort of year. So early on in the year, basically in February, we blew through that, and we've continued to break out a new highs on the monthly chart for ExxonMobil. So we're actually hitting all-time highs on Friday, which is pretty impressive. So as a trader now, if you go back to the weekly chart, we got a one top fade, a two top fade, and as I said, right, that third retry is typically a money or magic maker for traders. I love to trade a 3-top breakout, right? So your first top, you sell off, people take profits. You rechime, new traders come in for the buy side, bang, new shorts maybe, or profit taking occurs again. But then it's so strong that a ticker recovers and it wants to go. And once it breaks out of these double top highs, we then see new high breakouts. You see this all the time when I talk through like small cap plays. And I have a couple small caps I'm going to show you guys shortly as well. This is a mega cap, sort of obviously oil energy name, industrial name. So like this name is now breaking all-time highs. I still think there's probably more upside to go. It's a very saturated trade, excuse me. There's a lot of people in these names playing them. They've been long for like months and months and months. So it's a bit dangerous, but if you go in with tight stops, this could maybe go to 115, 120, 125, 130 before we finally maybe overshoot high and get like a deep red candle down, like one of these, like a 5-6% candle down. But these names are incredible movers. They got dividends, they're giving back, you're doing buybacks, they're record margins in 20, 30 years. So when you look at the big picture, right, and big time traders with big time liquidity for index funds or mutual funds or hedge fund traders, they're looking at bigger time frames. So they're looking at the weekly, monthly charts. And so this name is just screaming upside. And so I think they're going to ride this until the sort of, as I like to say, the music stops the music stops. So it kind of reminds me of that UPST chart when we just kept running from $30 to $40. You guys remember we got in that like $28, thing around the 400. Everyone's like, where's the top? And it finally crashed. And now it's at $23 again. But like, this is a name obviously much bigger in terms of market cap and margins, etc. But that was sort of a small cap runner. But this name might have some more upside. Another name I'm looking at is United Health. Check out United Health. Let's go over the monthly chart again. Look at this. This is incredible. You go back to about 1992. This was about 67 a share. So it's up about almost 1,000% since then. In 2008, we were at 20 a share. And then basically in 2019-20, we started really picking up. And if you look at the daily and weekly chart on this one, this is quite an interesting one. Back in 2022 in April, we had the highs of 550, got rejected, right? Highs of 550, got rejected 4 months later. Now we're retesting those 550s on UNH. This is a huge company. I think it's like a $500 billion company, guys. So options are really cheap, 22% on the IVs. They move really quickly in terms of up or down. The stock moves slow itself, but you get a 0.5 point move in this stock and it's probably a 50% move on a contract or maybe even 100. So that's how cheap the IVs are. So keep an eye on this one. This one could potentially get manipulated or maybe even break out on a mini short squeeze over 550. If we break 550, you could see, guys, a move to maybe the 600s. Just given the price action. I know it seems expensive here. They're probably trading at a premium, but look at this name. I mean, it's breaking out above the triple top. This is now the third one and it just broke all-time highs here. So maybe you see some follow through up into the 570s this week, maybe 600s even if you get another 3, 4, 5% move. Keep an eye on this one. This is sort of one you maybe want to run multi-day calls on a couple weeks out and maybe make a couple bucks, maybe 30, 50, 100% move on these contracts until you start to see a fade below maybe this level, 520. If it breaks 520, then you probably want to ride puts all the way down to the 480s, maybe even 450s again. But as long as it holds this level and we put in the horizontal line, guys, to show you guys where supports are, just to give you a reference, I'd probably say supports like right in here. You got your first level support in here, which is sort of anything above in here is bullish. When you start to break below this level, you have all this downside gap to be filled, which is a 450 quadruple bottom down in here. So you break under like 500, you probably want to buy puts for 450. Anything above that 520 zone up in here, I think you're going to get a major upshoot up in here to 570, 580s, maybe even 600s. So this could possibly be a 10% move. A 10% move on this stock, as I said, guys, could be hundreds of percentages on a call volume or contract. So keep an eye on UNH. That's a mega cap. So UNH, Exxon, those are two multi-decade all-time highs. So, these are charts that are multi-decade highs right now. So as I said, anyone who's been short over 10, 15, 20 years are now in the red, if that makes sense, guys. So, and these are bigger time frame for bigger liquidity traders. They're not probably day trading this stock. They're probably swinging this multi-day, multi-week, multi-month, multi-quarter, maybe even multi-year. So that, keep an eye on these names. It's not as your typical fast scalps that we do in the day trade channels, but these are bigger picture, monster mega cap market caps, 500 billion plus for UNH. I don't know what ExxonMobil's is, but hopefully those are helpful in terms of switching it up and looking at a bigger time frame. I want to talk through two small caps that I saw last week. I didn't trade them, but I just just doing some quick studying this week that potentially could see higher. First name is Epix. I think this is my favorite one of the two small caps that traded. We had a monster 180 breakout, I think. I don't know what it was. Was it data or something? Honestly, I didn't even read the news on it. I just saw it ripped out. Then we had 40 million shares the next day, which was pretty good volume, actually. And it only broke down 10% off those highs. And then actually the third day, which was a post-inside bar play, we had a new high on this one at 516. So 510 was the high on the breakout, and then 516 it actually got rejected a bit. And this traded a nice volume as well, 18 million shares, and it closed green on the day. You now have a bottom wick, two bottom wicks at 390. So if I went to the 5-minute chart, right, I want to show you guys what bullish price action looks like because I think it's really important. Let me go to the 30-minute chart so you guys can see. But I want to show you because I know people love to trade small caps, and this is some of the secrets I like to trade in small caps because the more patient you are on a very bullish setup in a small cap that's moving very quickly on a lot of liquidity is basically being patient and waiting for the zone to come to you. So what I mean by that is if you look at this name Epix, E-P-I-X, right? If we check this name out, right? We have a wick here. See this wick here, guys? This is bottom wick about 380, 390, right? And that's sort of where the next bull run came in. So if you missed the whole run up from basically 179, 180s all the way to 380, which is probably a 100% move, right? If you missed that, no problem. It's okay if you missed a run. Maybe you weren't trading it. Maybe you weren't trading that day. But that's fine. I'm okay missing a 100% run. But that doesn't mean I'm not going to buy something for another 20% higher if the trade setup works or it looks good and I see conviction in it, right? So if we see a wick here at 380, 390, we then saw another wick here 380, 390 a couple days later, right? So 1 day later, it broke down to 380, 390. Guess what happened, guys? Look at this candle here, 15% candle up. So there's a lot of demand on the buy side in the 380s, 390s on this name. Same thing again, right? Same thing again. It hasn't been breaking down below 380, 390. Look at this right here, right here, right here. So on Monday or Tuesday, if I get another fade to 370, 380, I'll probably try it, right? Now, if you're a big dip buyer and still think, okay, no, this really needs to cool off a couple more days before I buy it, your next level would be right here, the bottom of this candle, which is basically at about 409, 410. If this name were to get to 409, 410, I'd be a buyer at $4, and I'd look to sell this probably, guys, at $6 to $8 for a 50% candle move. And that might take a couple days or maybe a couple hours, but I'm just looking from a chart perspective. So 370, 380 would be a great spot if you get in there. With a stop loss and maybe 350, keep it at like 3 or 5% stop. That's probably how I'd try and play it. And then if I break below this 380, I'd probably look to try and get in and around that 3 level. And then potentially try and sell in the 5, 6s. So now you may not even get a dip on Monday too. This may just come back and start ripping over the 6s. If we break 650, you're probably going to want to target then 7, then 8. So this is a strong name I'm watching, guys. And the liquidity is pretty strong. We had 118 million, then 40 million, then 18 million. So if we could keep it above 10 or 20 million, I love that kind of liquidity. The chart looks pretty good. Go back to the weekly levels. We have a gap all the way up to $7.98 bucks, and then we have an ultra gap at around 10 to 11. So the first target would be like 7, 8 bucks on this name on Epix. Second target would probably be around 10 if FOMO hits and we start to get that squeeze up. It had a high of 36s back in 2021, and then I don't know, that looks like nonsense to me. I don't even know what that is, but just trading chart here. So that's Epix. Second one is, what's the second one that popped on Friday? QNGY. I know nothing about it. This is not as good as a setup in terms of the chart so far. This is a one-day popper, had great range. If you look at these candles, it popped about 30, 36, 15, 51, plus 8, 59, 50, about 60, 70% here, guys, in a 5, 10, about a 20-minute period popped off of that 180, which is a great move in here. This ticker needs to hold this level, basically where it closed at in after hours, which is an ugly close in after hours. So that makes me think, okay, it's not holding up so strong yet. We'll see what the price action is tomorrow morning. This name, I'd look for maybe a 270 up into 290. 270, 290 would be a nice spot for this name. Maybe look to sell 350 to 4. Keep an eye. So that's your pen and paper. That's what you want to be writing down. And why am I saying 270 to 290? See this bottom wick here? There was a nice demand candle in here. That's 270 all the way up to this wick about 290. So this basically, let me draw the line here for you guys. Right. So if you're holding a pen and paper taking notes, this is the area maybe to try and scale in on a position in here. right? So if you were to catch this dip in here, you maybe want to sell something that maybe moves bang up in here. You want to sell up in here to 350 coming in. So that could be a 20, 30, 40% bit move for you guys. Maybe buying this bottom wick candle here. 270. So it has to hold though. If it breaks below 270, you probably got all the way lower to down to 230. Then I'd say you're in bear territory. Honestly, you might be in bear territory if this breaks below 293 on Monday. Then you might just get a choppy movement. So the Epics chart, as I showed you guys, was much better. So keep an eye on those Epics levels. So that's 2 small caps. That's 2 mega caps we've covered. Then I kind of want to jump. Then we also did the indexes, of course. Then I want to jump into earnings plays this week, because what we have this week, guys, is the Fed. We have the Fed coming up. How many bips we're going to raise? 75 is priced in. I think they're going to stay their word and do a 75. That's how I'd probably look to trade it. There's a lot of people thinking they're going to do 50. I don't see it. Job reports are just still extremely, they're up. The market looks good. I mean, I still think the Fed's looking at things are really, really hot still. So, I'm thinking they're going to stay strict to their word. So I potentially may be playing some puts going into Wednesday, Thursday sort of time period. Maybe get some profit taking again if we could get to the SPY back to 390, 400. As I said, it might be a nice trade for next week, going into next week buying puts. So we'll see. As I said, we only have price action, so we have the Fed, and then we have another monster mega week of earnings. I mean, you got all the names, all the fun ones. You got your Coinbases, your Squares, all your Cathie Wood stocks. You got all the big mega caps were mostly last week. You have Starbucks, PayPal, Coin, Square, DraftKings. Those are just to name a few. There's a ton of sort of earnings this week. And I actually think some of these med caps, small caps, the ones that are down 70, 80%, I'm kind of bullish on some of these. I think you could get like a surprise sort of move on some of these potentially if things are so beat up and people are expecting the worst of the worst, that if they somehow surprise just a tad any of these small cap names, 15, 20, 30 billion market caps, like, I wouldn't be surprised if some of these names go 15, 20, 25% to the upside, just because they're so short. It's so negative sentiment. So some of those names I'm watching this week actually is, first one I'm going to be watching is Square. As I said, guys, I really, 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 really love Square as a long-term investment. I love Square for multiple reasons. Obviously being from New York, being from the city, spending a lot of time in the city, like Square's basically sort of taken over, like, at least New York City where I am, and I know in California as well, like digital payments. Every time you whip out your credit card, everything's basically done by those little swing around monitors, and Square's just taking that over. They're just eating up PayPal. PayPal's down like 60, 70%. They're losing a ton of money to Apple Pay, Square. Square is a great digital platform for all these big, small businesses. And I'm seeing tons of people still eating dinner, like eating lunches. Everyone's going out for drinks. Like people are still spending a ton of money. You see it with Amex earnings. Like people are they're doing really well. Amex, like credit card, Visa, like everyone's doing really well. So who's capturing a lot of those credit card companies, of course, but who's the end user, us themselves, are actually swiping the cards, right, on these digital technologies. And Square is a really big footprint. And it's actually getting close to a pretty nice level. This ran to like 289 at the highs. It's now down in the 60s. So it's down 60, 70%. And the March COVID lows went all the way to the 30s. I'd love to get this in the 30s. That would be like 40, 50% down from where we are now. The only problem I have with Square right now is the valuation. And the PE is still really high. The market cap's around 35 billion. They do like 3 to 4 billion revenues a quarter. I'm very interested to see what they put up this quarter. They also are not profitable yet, I believe. So that's another reason why it's a little sort of in that gray area for me. But it's a great long-term company. I'm looking to really pick this up in the long port. If I could get this in the 30s, 40s, I'd love to scale into this name for the next 5, 10 years, because I do think this ultimately can be a $200, $300, $400 stock. If we could continue just they're crushing revenues. 3, 4 billion a quarter is unbelievable for this medcap name. And I think it's very underappreciated. And so that earnings report, I believe, is on Thursday. And I want to go over the levels with you guys, because this is a name I think could surprise. Although if you look at the chart, it kind of looks like a meta chart. It could just crash to the 40s, which would be great. I'd be happy with picking some up in the 30s, 40s. But this name has upside all the way to, if I want to look at the daily chart here, let's look at the daily chart. Whoops. Why is it so tight here? Square's one of the, here we go. That's a little bit better. So if we go sort of the horizontal line here across the board, we have supports back from the June crash in the 50s. I think I even alerted in the 50s as a buy zone. So you're probably up 5, 10%, maybe 15% on this name already from if you add in the last couple months, which is nice. You get a cushion going into earnings. The upside on this name, guys, would be all the way to this top wick here, $70. If we get really, really good, strong report on earnings, I think this could see $75, $76. So those would be my levels up. Down, I think you get 55, 50. 55 to 50, so you get a 10%, 15, 20% move down, you get to $50, and $50, $51 has been the floor all year long. So, if you're going to play an upside call here, you might want to look to buy them maybe Monday morning on a pullback, because calls are only 100% IV. Usually this name gets 200% like a Netflix. It's a very volatile move. So you might be able to play, as I mentioned, guys, take notes here. You might be able to play this name going into the earnings print Thursday on a Monday, Tuesday, buying cheap calls, selling them 30, 40, 50, 60, 70, 100% on the premium spiking into the earnings. We played the earnings going into Meta. Those ran 100, 200% on the calls, right? So you can make money by actually selling into before the earnings actually take place rather than playing it itself, right? Given how volatile these are, market makers are making a lot of money on the spread. So you can actually buy maybe cheap calls here if you get a dip on Monday, Tuesday, and then sell those into strength on a Wednesday, Thursday for earnings. As I said, your levels are 65 and 70. Those 70 calls potentially, I think, will probably be the ones that light up this week. On the volume side, $70 calls on this name, which would be about 10, 15% move to the upside, okay? That is ticker Square, digital payments, small businesses, digital, everything like that. Okay, the next ticker we have is PayPal. This is a really ugly chart for me. It kind of reminds me of like the Meta chart. And they're still trading at a pretty high PE. Valuations 110, 120, 130 billion. I still think this could come down to like 80, 90 billion market cap. I wouldn't be surprised if this crashed 10, 15, 20% on earnings. They're really old school. So like your typical mom, dad, grandpa, like that's what everyone was using when they were buying things on eBay or Amazon or like, yeah, I use PayPal once in a while, but everything's mostly checkout with credit card, and they're just losing a ton of business. They're not growing as fast. They tried to acquire Pinterest earlier on in the year. So there's a lot going on with PayPal, and the chart's pretty ugly, and I want to talk through levels on the chart here. Get your pen and paper ready for PayPal. Close it around $80. I think you have downside into the 65, 75 area. Your upside targets would be about 100. A little over $100 would be your upside target. And this is a big move. I'm expecting a 10, 15% move on PayPal, up or down. And we'll see how those premiums are as well. If they're cheap premiums, I might strangle it. Maybe hold some calls, hold some puts, and maybe play off that. Like the Meta strangle, I think last week paid almost 300%. So you lose 100% on the calls, then you make 200% on the puts, so you double your money. So there's opportunity here to play both ways. This is a name I might look to maybe play a strangle if I'm thinking the move's going to be that sort of wide. And then you have a ticker Starbucks I'm looking at. This one's tricky because it has a wedge here on the weekly chart, but I still think it's so much higher. And I mean, if we look at 2018 levels, this is $50 a share. It's almost double that. Let's look at the 2020 COVID crash at around 68. What are we at now? 87. I think Starbucks could potentially miss and go down to maybe the 78, 80 range. So maybe about a 10% move down. If it really missed, you'd see a gap fill back down to 71, 72. I just look where this chart's trading. I mean, all-time highs are 120. I don't know. I don't love this chart because we didn't really drop that much from really the 115 zones. We're down only 20, 30, 40%. I still think this name maybe has some more downside to it in the 70, 75 zone. So if premiums are cheap here, I might try some lotto puts maybe at the 80 strike or 75 strike for next Friday, maybe not this Friday. That's Starbucks. I think they report Thursday. So this could be a good maybe lotto play Friday. You look for a 5, 10% move to the downside. I don't know. Just based on the chart, it looks like it kind of wants to retest these 70 lows. That's Starbucks. And as I said, I wouldn't be buying puts if Starbucks was probably trading down in here at 60, because then I'm like, is more upside to maybe 70, 80s. But given that it's held pretty strong and hasn't really dropped, I don't know how much more pricing power they can get when people are in a recession. Who's going to be buying $7, $50 coffee? So I don't love the name, but I know people are like, I get a Starbucks coffee every day before work and I'll never change. So, they have that sort of cult buying mentality. So it is a tricky one to play. That's Starbucks. Then we have your crypto speculation, Coinbase. This is a funny one because this thing has not dropped in the last 3-4 months, maybe 5 months. It's been holding this 60 to 70 range for ever. And it held that range. It's super funny because it held the 60, 70 range on Coin after they announced that big BlackRock partnership, and basically BlackRock saying that they have institutional clients that want to throw big money at crypto, and this is their partnership with Coinbase to basically go through that sort of channel. And that will be sort of their formal, legal channel to go through. And so for me, that sort of changed the way I thought about the stock, because now it feels like there's someone really big behind the scenes that sort of like wants to be a part of this journey. And so for me, going from 400, 300, 200, 100, all the way down to 70 here, this could be another one that could maybe potentially pop back to about $100 levels. And that's where I'd look to probably scale out and sell some of these if we get a pop to 100. And they also have earnings on Thursday as well, I believe, Wednesday or Thursday. So keep an eye on this one. The premiums are ridiculously high, though. This thing's probably going to trade 150, 200% on the IV. So, it could be one that's as well, again, to sell some cheap calls or buy some cheap calls and run up, sell this puppy. That being said, though, I still think there's that floor around 50, 60. So if you get a overshoot down on coin, it could be an opportunity potentially scaling for a trade to the upside into the end of year. A lot of these are trade ideas maybe into the end of year. And so that's coin. The last one I have is DraftKings. You have a lot of millennials getting absolutely smoked trading. Getting smoked in sports betting, etc., which means these companies are making some pretty good coin. Margins have always been tough on this company, but the chart is presenting some upside. So I want to look at ticker DraftKings here. If you look at the daily, we had sort of a downtrend, broke to new here, actually recovered sort of in terms of propping up higher lows. Now we're sort of building out of a base. And so for me, DraftKings screams like it looks like it wants to retest 16s, maybe even break out to 17, 18, 19s. So 17 calls maybe would be an area, maybe even all the way up to 18s. This name looks like it wants to sort of retest and rip through 17, 18. So keep an eye on this one. This is one I think could potentially be moved higher. This is one that could potentially get moved to the 17, 18s. As a cap bounce. That would be a 10, 20, 30% move from this level itself, only because it formed a nice base, and the last couple of sessions are actually up 15%, up 10%. So they're up like 10, 12% from the last couple sessions, which is a pretty good move, guys. So, I think there's a gap to fill up into the 17s, which is about a 12%, 13% move from current levels on the open. So if you get some dips this week, DraftKings reports Friday morning. So you have plenty of time on this one. The lotto play would probably be Thursday night. You'd probably want to try this as a lotto. We'll see. I might play it, but I think there's risk to potentially the upside on this name. That's DraftKings. Obviously, a lot of football going on. Basketball's coming up, so there's a lot of sports betting going on. And I'm thinking they have some decent numbers potentially. So they also have some partnerships going on with ESPN. So some pretty good things going with this company. As you recall, it's down all the way from $74 down all the way to 13. So it IPO'd around, or maybe it was a SPAC at around 10. So, it's trading modestly above that SPAC level, but, we'll keep an eye on that one. That's DraftKings. So I kind of went through a bunch of charts today, and I'm really focused, guys, and the key takeaways for today is this. There are really, really, really good charts out there, and then there's really, really bad charts out there, right? Meta chart was disgusting going into earnings. No bidders, no buyers, no nothing. And then all of a sudden, the numbers were so bad that it was just overkill. And everyone screamed, get me the hell out of this stock. And so if you don't have cap bounces all year long and it's not bouncing at all with the market, and then you just have a bad earnings report, it's sort of just like World War III. Like, get me out of this name. Like, get me out. It's bloody. Like, get me out. It doesn't bounce at all when the market goes up. People just get frustrated, right? So when you look for, same thing to the opposite side, like if something's just flying on the quarterly chart, weekly chart, daily chart, like UNH here, right? Like, people are saying, wow, when's this going to stop? Like, so don't be sometimes, I always kind of have this problem as well. Like, I sometimes afraid to buy all-time high breakouts. Like Tesla is afraid to play it from like 1,000 to 1,250, even though I was just watching it run in front of my face. Like, there's potential to make money on all-time high breakouts. Those are like when shorts get squeezed. That's when buyers come in. That's when algos sort of take over because there's no resistances above the level. So UNH is one to keep an eye on it, right? We could get to 580, 600. So sometimes I'd like to say, is my advice sometimes, is don't be afraid to sort of buy those breakouts. Just keep the stop like really tight, like at the breakout level. So, barely lose any money if this thing's craters back down, right? Always keep those stop losses tight. And so I'm always preaching in the Discord is when a stock's making a run to the upside or downside, whether you're long or short, you want to be moving up your stop loss, whether that's on your shares you're buying or whether that's option contracts, guys. So if you're up 20, 30, 40, 50, 60, and the stock keeps going the way you're basically predicting it, You want to be moving the stop loss. Now you're up 50, 60% on your calls. You maybe want to move that stop loss to 30, 40% on the call. So guess what? You get a quick raid down in the market. These markets move fast. You at least lock 30, 40%, right? That's how we enable not bag holding things. That way you're always going to secure bags. You're always going to secure profits and be consistent on a daily, weekly, monthly performance. And that's really essential in trading. The hardest part in trading is actually keeping the capital itself, sometimes not actually making the trades itself. And so actually, if you're moving your stop loss according with your targets, right? Before you enter a trade, I went over this actually with I think like 100 members and students, I think it was 2 weeks ago, right? These are my 3 rules, right? Before I enter a trade. 1, it has to have liquidity. 2, it's got to have range percentage, right? So basically, I'm not joining in a trade basically unless it's really moving fast up or down. Because when things move fast up or down, that means that to me screams you have potential to make money on the trade because of how fast the percentages are moving, right? That's when big traders make their biggest money, when things are really volatile and really overshooting up or really overshooting down. That's when traders make a big, sort of lot of cash. That's what you want as a day trader, right? That's the second thing. And the third thing is your levels, your targets. Before you enter a trade, you need to have your first target, your second target, your third target. And you need to know these in the back of your head, or at least you're scaling out at certain points in your mind, right? You also need to have your stop loss. The worst thing I've seen traders do is when things start to go not the way they want to go, they go, oh, I'll buy the dip, I'll average down. Oh, I'll keep averaging down. Up 2 or 3 months later, maybe 2 or 3 weeks later, you're down 40, 50, 60. It just keeps going and going. The farther you go down, when you get past that red 20% level, do you realize you need then the move of a 30, 40% level just to get back to green? The farther you go down, the longer the potential, the bigger the move it has to go up just to break even. So I always try and think of that when things don't go my way. The biggest thing I like to do is I like to cut my, excuse my language, I like to cut my shit fast. I cut my poop fast. I cut it quick because the faster I can cut, the faster I can get my liquidity back, the better I can be and focus on another trade. I don't want to marry. I don't want to be emotional. I don't want to be a marry. I don't want to marry anyone's stock. I don't want to marry a ticker. I don't want to marry a play. Even if you have strong conviction, the charts don't lie. The price action won't lie. If the price action shows and it's doing exactly what you think it's going to do, then you have some more breathing room. You can move your stop loss up. You can maybe be more patient for your overshoots. So hopefully that's sort of helpful. I know there was a lot of questions on that stuff early on in the week because obviously, things move pretty quickly. That it's important to obviously scale out of targets, keep your stops tight, etc. Right? In my experience over the years trading, I can't take a trade without using a stop loss because it's basically like going into your car without having your car keys. You can't drive the car unless you have your car keys. And for me, that's what a stop loss represents. So I can't trade in this market without having a stop loss. And without watching, obviously, technical level. So hopefully that's pretty helpful. I know we went for 45 minutes here. We have way more viewers on than expected. Oh my goodness, a lot of people joined today. Hopefully the session's been pretty helpful so far. But definitely shoot some questions, guys. I'll answer some questions. I'll try and answer them as best as I possibly can. There's a lot of people here, so I'll definitely, I'll switch. I'll do some Q&A given how many folks we have on, which is great. And obviously, the tech team will post the invite to the Discord. I trade all my sort of ideas and post everything in analysis live within the Discord itself. So you can follow me there. I know folks have been following me for years on social media. Some just randomly come in and join. It's great. We have an awesome options team. We have tons of education. A ton of really, really great traders in the options trading floor. We have a ton of really great traders in small caps, although small caps have been sort of dead most of the year. So everyone's sort of just waiting on liquidity to come back. So I haven't really been trading those in like 4 or 5 months. So, but anyway, shoot some questions. I'll try and answer as best as I possibly can. Hopefully this session has been pretty helpful. Awesome. Let's see. Yeah, go ahead, guys. Shoot some questions. I'll try and answer some below. It could be about anything, and I'll try and answer as best I can. If I can, I just will say I can't answer the questions. If you're loving the videos, definitely go check out the past couple of videos. I put in hours and hours of time for these prep sessions. So, I've gotten so many DMs and hundreds of people with feedback saying how much they love it and how much they learn from it. I mean, this is all free stuff, guys, and I take my time out of my day and all over the weekend to sort of go through this stuff with you guys and best prepare ourselves for the next trading week. And preparation is really key in this market to make a ton of money and be successful trading. So yeah. Anyway, shoot some questions. I'll try and answer a few, and I'll do about 5-10 minute Q&A here. Wrap up. Now I got to watch my G-Men at 4. So. Any idea if Tesla's going to 250 this week? Let's look at the Tesla chart. Sure, let's do a quick study on Tesla chart. Tesla. It's under a lot of pressure. Chart actually doesn't look good, but we got a base here at 208, which we called. 188 would be their bottom here, maybe your bottom tick where you want to get in at. Tesla's got a gap to potentially fill up into this zone here, which is exactly what you just asked, my friend, 250. It's got to break 230 and hold 230 for a day or two. Then you might get your 250 sort of push. If it does not break 230 and holds under 230, bears and sellers are full in control. Then you'd probably want to look for your 210, 200 push again if we do not break out of 230 range this week. So that's Tesla for you. Hopefully that's helpful. Next question. J Togs, how do you feel about yearly calls on SQ Square? J Togs, if Square were to crash 15, 20, 25% on the earnings Thursday, I'd probably look to maybe buy like 2023 Jan calls or 2024 Jan calls at like the 70, 80 strike, maybe even 100 strike. I love the company, but I think, as I said, the PE is still really high. So I'd love to get Square. I told you in the 30, 40, 50s. That's where I want to maybe scale into a long-term position. And that could be a 2, 3, 4, 5, 6 bagger in 3 to 5 years. And that's sort of how I'm looking at that name right now. But I would like more of a dip because I think Wall Street thinks it still has a high PE. So I'm waiting for it to come back in a bit. What do you think about crypto this week, Mohammed? I was saying this Bitcoin last week. Bitcoin was holding 19, 20 G's for quite some time now. I think you might get a crypto push, maybe a Bitcoin push to maybe 22, 24, maybe even overshoot to 25. Bitcoin looks pretty good. The whole yuan thing helped, I think, a little bit. Coinbase helped. I think institutional buying has helped. Some of these bigger shops, Coinbase, FTX, they've been buying a ton of Bitcoin, Ethereum. So you could get a bottom bounce, 10, 20, 30% bounce on Bitcoin, Ethereum. So those are the two I really focus on. The other stuff I don't really care or watch. But 22, 24, 25 would be your Bitcoin levels. Ethereum, I don't have the levels offhand. But yeah, keep an eye on Bitcoin. As I said, if risk comes on, Bitcoin's usually the first thing that sort of may pop a bit, okay? So keep an eye if risk is on, Bitcoin can continue moving up higher, Muhammad. Dr. Scratchman, when do you feel like, what do you do when you feel like quitting trading? It happens quite a bit for me, especially when it's not going your way, right? I've had my biggest red days, over the years, over my career. It's not fun. Big red days, you want to open the window and literally, it's bad. Anyway, you just got to find the next trade, take a deep breath, take a walk, get some water, whatever. Maybe take a few days off, a month off, whatever your trade horizon or time limit is. Come back with a fresh peace of mind. Get back to your basics. For me, it's base hits. You want to do small base hits. Base hits add up over time. I've posted the chart where if you make 100 a day, 200 a day, 500 a day, 1,000 a day, 2,000 a day, 5,000 a day, what you can potentially make over a year period. I know 100, 200 a day seems like nothing, but that equates to 50, 60, 70,000 on the year. You do 500 a day, all of a sudden you're making 6 figures on the year. You do 1,000 a day, you're making $500,000, $2,000 a day, $500,000, $2 million. So it's like things continue to go up. And I think being in that mindset of having base hits, not trying to hit home runs, seeing people on social media make 500% or 1,000% on a contract, like that stuff's really, really lucky and hard to do. And over time, it's not going to work well. Yeah, you may get lucky and hit a huge grand slam home run, lose maybe 99 trades after that. But the reality is that you got to stick to your small base hits and your strategy, because that's what basically compounds your money over time. That's how I've been successful. That's how a zillion other traders I follow or look up to, that's how they've been successful. So that's sort of how I look at it in that sense. If you're having a terrible week or bad month, sort of close your eyes, take a breath, reset. It's anything's possible. I've seen people turn 5,000 into millions. I've seen people turn 15,000 into 2 or 3 million myself. We've seen all this happen. You can do it. Anyone can do it. Just takes time, effort, and sort of focus and study preparation while everyone else is fooling around on the weekends. This is the time where the money's made, in my opinion, when you start to study. Hopefully that's helpful. I know it's a long-winded answer to that question. Stephen Webb, I'm still trying to learn how to read charts. Stephen, just scroll through all my YouTube videos. You're going to learn a ton just by reading charts. And then obviously feel free to DM me within Discord or some of the mods and be able to help you out. All here to help. Mike, the elephant in the room. What about Mullen? Mullen looks pretty good. I didn't highlight it this week. Has a ton of liquidity. It's just a speculative name, obviously. I would just day trade it. I wouldn't be swinging anything on that name just because it's known for big down moves, big up moves. So I'd probably just day trade it because the liquidity is so strong. SoFi earnings, don't know much about the company. I know that's a big sort of meme one, or everyone's talking about that one. I don't know anything about it. So I'm going to stay away from that one. Mr. Hawk, what should we focus on in order to become great traders? Honestly, Mr. Hawk, studying price action. So the actual underlying what's happening behind the scenes during the day. So that could be, you could see a ton of buying on the 5, 10, 15-minute candles. You're seeing a lot of selling on the tape. Follow where the money's going is basically the short answer to that. If the money's going in, don't fight it. Just ride the waves. You just want to maybe make a small percentage of all the big money that's coming into a stock, like Apple on Friday. Should Apple have popped 8% on Friday? Hell no. No. I mean, they basically just beat on everything and they slow growth on a bunch of other stuff. Should they have been up 8%? No way. But guess what? It was the only one that reported somewhat good earnings, so everyone sort of just FOMO'd into it. And it was also a big Friday expiration day, so everyone just FOMO'd into it and it kept running and running. It's up 3% at the open and just ripped up 5%. The contracts flew up and is basically a trade, right? That was, getting in, maybe making a percentage or two, getting out. And so that was a great example of sort of that FOMO, but like you're taking advantage of the price action. Price action was so strong on Apple that it's kind of like, let me jump in and ride this wave because this thing wants higher, right? Same thing when things overshoot down, you sort of ride it down until you hit your stops. So it's, I would just say follow the price action. Mike, I'm going to rejoin the Discord. I've been following you in the group since March 2020. Nice, man. Hopefully all is well. Looking forward to have you back in here. We got thousands of folks in here, so it's a great server, great community, great team. Appreciate that. TQQ calls this week. Not sure. Roku earnings not touching. Josh Bowers, happy to help. Yep, no worries, my man. How do you pick Beb Alexander and how do you pick strangle strike price? This is a good question, guys. How do you pick a strangle strike price? So if you're playing like a move, right, in a ticker that you think is going to be a 10% move above, I like to use the 10% rule. So for Meta on Friday, I gave 150 calls and then 120 puts. And the stock was around 135, 138. So basically a 10% up, 10% down. Luckily, we shot 20% down. And those, I think, ran 4 or 5x versus your calls that lost 100%. So you were able to then profit like 2, 3x on those. So that's how I would play a strangle, like a 10% move on a stock like that. If you're playing like an Apple strangle, now keep in mind, guys, for this week, you're going to see that November, here's a trick for everyone. I gave this to all my paying subscribers. I'll give it to you guys for free here. But here's a trick. When you go look at earnings weeks, market makers typically overcharge you for those contracts. And they actually make more money on the time if the stock doesn't make that anticipated move. So what you're going to want to actually look at, guys, is 2 or 3 weeks out if you're predicting a move up or down. So you want to be maybe looking at the November 18th strike for this month, because you're going to find that those IVs percentages, which is basically the direction that it needs to move for you to make money, the higher those are, the less potential money you can make. The lower the IV, the higher percentage you can make, because that means if a big move happens on a really low IV, that's when things explode. That's when contracts explode. That's when you saw your Target, that Target crash 5-6 months ago. Those things ran like 30,000%. Like that's when you see the big drastic moves, when the IVs are low. So the longer time period out, you want to look for smaller IVs. So example, if you wanted to play a strangle potentially on Coinbase or Square or PayPal or Starbucks or DraftKings, you maybe want to look at the November 18th strike and maybe play 10% up here and there. Therefore, you can potentially make money on an overshoot down or overshoot up, etc. Right? And so therefore, those contracts are actually going to be cheaper. Whereas if you might make more money on those contracts 2 or 3 weeks out than you would on the weeklies itself, because of the decay per day and how high those things really need to move, how fast they need to move to either direction for you to actually make some type of money on the contract. So on these option days last week and this week, I don't actually play the weeklies because they're just so inflated. Now keep in mind, I'll play the weeklies after something crashes or takes off, because then your IV starts to go down by the day. So that's the trick. So like on Friday, the Meta IV was like 200, got all the way down to like 80%. Then you maybe want to scalp a little bit. That's when it's more higher risk. So that's like an options trick that for the new traders to keep in mind, because otherwise you just can lose a lot of money just buying. Even if the move's like going up, you buy and the stock goes up another 3, 4, 5%. You're like, yes, I got my calls. This thing's fine. And you look at your position, you're like, why am I red 30%? It's because the IV continues to go higher, and the move's actually not anticipated within the stock, and it just continues going higher, the IVs, and you can potentially lose money that way. So you always maybe want to buy for a couple weeks out, especially when things are this volatile within the market. You can potentially make more coin and more percentage gains. Hopefully that's a helpful little check there. Steve S. Love your concept and trading. Take little gains and move on while it increases over time. Yep, I'm a scalper. I'm just trying to make some money off what the big boys in whales and index funds, hedge funds, mutual funds are doing, right? With those flows, I'm just trying to jump in for a little gain, get out, and it's been really successful, obviously, over the years. David Parker, what are your thoughts for Wednesday 75? I think this Fed's going to do 75 bips. I'd be shocked if he goes lower. But if he goes lower than 75, I'd say watch out above. You could get a FOMO rally, I think, potentially. Friday's rally was really strange. I thought the same, unknown. I did think that was. I think we have an election run up coming in, and then sort of maybe a potential big move down after that. So I'd be looking to play the bull side, as I said last week on the video on Sunday, as we've already moved up 2% QQQ, 4% on the SPY, 6% on the Dow. Since my video last Sunday, I think we still maybe have a little bit more to the upside. It wouldn't be like all in here, but we're looking to scalp for some more up potential on some of these earnings. And then I think you get maybe our overshoot retest down to the lows. Thoughts on VIX sub 20? If you get VIX under 20, I think I think that would be a really good buy on VIX under 20. I still think VIX could potentially go 30s, 40s maybe next year if things get pretty ugly. Yeah, hopefully that's helpful. Really cool. No problem. I'm happy to help, guys. Really awesome session. Thanks for the tech team jumping on. The tech team will post a link for the Discord as well as some other social channels you guys want to follow us at. As I mentioned, you could come to the Discord and follow the premium alerts and ideas and charts all within the Discord itself. That's Spud Zone Discord. You guys can check it out. Let's have a really great week. I hope this session was really helpful. We did some awesome price action on stuff. Levels are really important to trading. So hopefully, you guys took notes, and feel free to DM me any questions. I'm happy to help all the time as much as I can. Sometimes I get hundreds of DMs. It's hard to keep up. But as you guys know, I love this shit. So I try to work 15, 20 hours a day and help as many people as I can. So keep up the great work. Keep up those testimonials. Keep studying. And if you're feeling confident, always humble yourself. And then if you're feeling in the dumps, always get that confidence back. So keep your head up, and it's a crazy market. But if you can trade well or trade okay or stay flat in this kind of market, you're going to do really, really well in the future when things settle down. So awesome, guys. Keep up the great work, and let's have another great trading week. And cheers. Appreciate everyone jumping on. Awesome stuff.